Hello and welcome to ATFX's Bank of Japan preview. My name's Nick Twidale. I'm the Chief Market Analyst. We're going to be looking at the Bank of Japan's latest rate call coming up in a day and a bit's time and its influence on the yen and yen crosses. As always, please feel free to subscribe to our channel for all the latest market updates. So let's get cracking on the Bank of Japan. It is a huge week for global markets. It's been fascinating moves for Japanese markets already with a surprise election results, disappointment for the ruling party. The ruling party has been in place for many, many years and decades. They've lost their overall majority in the lower house, and that has influenced markets. We saw yen creep up on it gapped on the Monday morning open, and now we've got an even bigger influence, the central bank coming through. If you'd have asked most commentators maybe a month ago, 6 weeks ago, we'd be looking for a rate hike at this meeting. And this comes despite inflation creeping up, wage growth creeping up. If you look at some of the news that you're having out of Japan with regards to wage growth, they've had some of the biggest agreed increases for a highly unionized country. And they're looking for more, and they're coming up in the next couple of weeks as well. But political uncertainty has massively increased. We've got a new prime minister. New prime minister came in. He was renowned to be relatively hawkish, and that's what took us down to this 139.50 level. Since then, he did a dramatic turnaround. I've mentioned it a couple of times, and he's become a little bit more, I suppose, politically friendly, and that has seen this depreciation in the yen. So looking at trading opportunities coming in, what are we going to get from the Bank of Japan? We're pretty much guaranteed there's going to be no change. They're going to stick at that 0.25% or under 0.25%. It's whether we do start to see more hawkish inference from the Bank of Japan. That could push prices down a bit. We're going to look at the crosses again in a second. If we got, the surprise I think is if we got a more dovish committee, we would see a break up to these bigger levels. This is the hourly chart, as I said, and we would challenge those 159s. Just skipping over to a couple of the crosses as well, because it's not just a dollar move against the yen at the moment. It is a yen move. This is euro yen. It has been the hardest mover against the dollar, but also on the crosses. Lows down around 155, 10 big figures higher, 165 on that. Similar sort of pattern. The yen moves could be a better trade this week on the crosses because you take that dollar side out of the equation. But same thing again. We get a more dovish Bank of Japan and you know, they pull back on those rate hike expectations. We could see us moving up to these, breaking through this, and this is a relatively weak trend line, let's be honest. We're looking for a break through the trend line, a break through the highs, up to these recent height, and that's what, July 24. We challenge 168 fairly quickly, and then, you know, it does become a fairly swift move back up to these 174 and these massive multi-year highs, 175.40. I'll just quickly skip through to the other major crosses. This is sterling yen, similar sort of move. 180, we're looking at sterling yen, 180.02, pretty close, eh? All 20 big figures higher, and that has just come from what, late July 24. 20 big figures in sterling yen. Sterling's appreciated for a reason. It has been that depreciation, that pullback on rate hike expectations. I'll just skip over to the local favourite here for the Sydneyites. This is Aussie yen. Aussie yen, always a good indicator of risk as well. But there you go, those lows when we got those massive gap in early August. This is one of the things that did spook the Bank of Japan. We got that crash that happened in the stock markets, and they got a little bit worried about how quickly this move happened. And you see on this day in particular, high at 95.44, low at 90.35. But the appreciation, as you can see, low 90.35, we're all the way up here near highs, 10 big figures again, or 11 big figures nearly, 90.34. I'll take us back to the dollar. I cannot emphasize how big this meeting is and this week. So what I think most people are expecting is we do get a relatively hawkish Bank of Japan, and it does drift back. It labels the yen to appreciate a bit because it is not in their interest to see further sharp depreciation in the yen either. We move back into these ranges. First level we're looking at on the dailies is probably that 200-day moving average. That comes in at 151. So that's still that's still a big figure and a half away. And then we're looking all the way down for this sort of like short-term trend line support. That's all the way at 146. I will touch upon the other huge US data employment this week, and we've got the elections coming. We've got big earnings in the States. The dollar side of this trade will probably dictate where we're going. But first of all, we will have the Bank of Japan. The Bank of Japan, we could see, as we always know, 2, 3, 4 big figure moves on it. What is likely to be happening, is those job numbers out of the US. They will take moves on this particular chart on the dollar yen. We could see, if we see strong dollar numbers again, which is going to lead to an even bigger pullback in those Fed rate cut expectations, we could see a break of these levels at 154. And as I said, we're straight up to these sort of 158 levels, and then it opens away for those sort of like 34, 35-year highs up around 162. So fantastic trading opportunities. There is a lot going on this week. Bank of Japan is going to be a blockbuster in a day and a half's time. Good luck with your trading. Thanks for joining us at ATFX.